Welcome to the Sydney Startup Show. Today with me, we have Mark Paul. Mark Paul is the founder, CEO of an amazing AI corporate wellness platform. Mark, welcome to the show.
Thanks for having me, Callum. It's great to be here.
Mark, tell us about your OKPulse.
Sure. So, OKPulse is a AI-enabled platform to solve employee wellness issues. It builds on the traditional employee and corporate wellness situation. The way we're different is we're a fully virtual platform. We collect various sort of metrics on employee wellness, and then we use AI analytics to surface early risk to the employers.
So we use OKPulse ourselves in our organization, and it's been in market for a little while now. Tell us a bit about who's using it and the types of companies that are using it and how are they using it.
Yeah, sure. So it's been in market for about 8 months now. It's been used by 4 companies. The main use of it right now is during the COVID era when most of the organizations are remotely having almost partially or most of their employee base is remote. So they're using it as a way to keep a proactive check on their employee wellness. It's like I mentioned before, it's fully virtual, it's fully integrated into their existing sort of identity platforms in their organizations. It's used during the COVID time mainly in that aspect.
So in terms of the problems that you saw the opportunities for, tell us more about. There are many corporate wellness platforms out there. What exactly does OKPulse do relative to lots of corporate wellness programs that are out there?
Yeah. Okay. So just let's rewind to the time before COVID, right? So most organizations, the way employee wellness solutions work in these organizations, the way I describe it is it's a very physical sort of mechanism. You have your HR teams who need to regularly check in on your employees who are physically present. That all changed when COVID hit, right? So all of a sudden, you no longer have that one-on-one interaction. So things like detecting early risk and stress and anxiety, these things couldn't happen the way it traditionally did. So it moved to a more virtual platform. That's where we differentiate. So there is very little innovation in this space. A lot of the existing corporate wellness platforms are quite what we consider quite legacy. They're very hands-on. So there's very little innovation in the AI, in the data, in the analytics space, and that's how we differ.
So tell us the history of this startup with OKPulse. You've been able to spin together this entire platform and the solution and optimize it for the post-COVID era or during the COVID era in particular. What's the history of this?
Okay, so like I said, it's been in market for 8 months, but that's not how long we took to build it. It's been actually the core platform that it's built on. So it's built on a core platform of data analytics and ML. That's been in market for five years, and that's a long time build, quite mature. It's largely open source as well, so which is great. OKPulse as an idea came about with COVID. One of my close friends, he had this idea, let's try to look at a new way to do employee wellness. We leveraged the data analytics and ML that we had previously built for the other platform I was talking about, and we spun it up in about 3 weeks. So the idea to market was about 3 weeks, but the core platform is about 5 years old, so it's quite mature.
And what was it like going to your first set of customers, trying to explain to them right in the middle of this whole COVID stress with organizations, and how did you manage to get the traction so early on?
So we have got a good team. I'm mainly looking after the product and the tech side of things. Also, I kind of look after the open source platform, like I mentioned. But we have a team, our commercial founder. He's very well connected, and he didn't really have much of a hard sell because it was a real problem, right? When COVID hit, all the existing ways of monitoring employee wellness very quickly started to show its age. So all they had to do is reach out, show the benefits. We had quite a mature platform. It surfaced the risks that the employees were going to face. And the other part to this is it's completely free. So we're going with that approach. We don't charge for it, so it's very easy to. It was very easy for us to get organizations to sign up and start using it.
And in terms of scaling this out and some of the feedback that you're getting from organizations, how have organizations benefited from these now? They've been using it for a little while.
Mm-hmm, mm-hmm. So the first organization we got on board, we went into a sort of co-design with them. So when we put out the first platform, the first version of it, we did have feedback from a psychiatrist, so we built those analytics into it. But realistically, we had never really gone into an organization we didn't get a workforce. So the first organization we engaged, it was quite a small user base. We had about 50 people in it. So what we did is we co-designed with them, and we iterated. So we put out the first version. We spoke to the HR teams and said, what do you think of this? They very quickly pointed out the good things, they pointed out the bad things, and we just iterated that way until we brought it to a point where we felt it was ready for the next customer. And then we just brought the next customer on, and so on and so forth. And to be honest, we're still iterating and doing all of that.
I mean, by the way, we're using it across our groups, across each of our businesses at AI, and I can tell you, we had a similar journey as well. I think it took us a little while to. It was not a very difficult concept to understand, and that was the beauty of it. And my favorite part of using it was the single sign-on capability, and that just meant that we didn't have to enable anybody. We just had to literally broadcast this and have it available to all of our employees, including our contractors, casuals, and interns even as well. And we were able to pretty much only through an email get everybody on board. Onboarding was a bit of a challenge, where we had to explain and let people know that there was actually an intrinsic value in signing up and providing the data and things like that. What's been your experience across other organizations that are trying to roll a solution like this out in the marketplace, and how have others been able to solve these issues?
So all the things you mentioned, it's right on our radar, right? So the things we focus on is the frictionless sign-on. Like, the last thing you want is an organization having to have another identity platform. How do we maintain another set of usernames and passwords? So, in fact, when we first rolled it out to AI Australia, that was the thing that we co-designed together. If you remember, we worked on Azure AD, and we got that working with you, and it was single sign-on, so that was brilliant. So these are the things we pick up with every sort of trial organization we bring on board. One of the organizations we're rolling it out to right now, they don't use Azure AD, and they just come to us and say, listen, we want Google single sign-on, and that aligns with our roadmap. We're like, brilliant, we're building it right now. Likewise, that same organization tells us, we don't want to engage with our employees on SMS or email. We want to engage with them on Slack because we have everybody on Slack, so we're building that in as well. So we roll it out, we look at the actual gaps of the HR teams and the organizations, and we just iterate and build it into our product. And that's just an iterative, ongoing process.
How do you feel about 8 months in the market? How do you feel about the maturity of the product now, and what's the future of this platform?
OKPulse itself, like I said, it's 8 months, but the underlying data analytics and ML is 5 years old. So it's open source. It's battle tested to a certain degree. As a employee wellness product, 8 months, we still feel it's early, and we're not naive to think that this is in its final form. We are very pro into iterative improvements or continuous improvements. But in terms of scalability and the insights and the ML value we provide, we're pretty confident in it. And it's only going to get better.
So in Australia in particular, certainly during COVID, during lockdown, the platform made a lot of sense. If anything, I think it was one of the only ways people were able to communicate outside the work conversation. And we found, as one of the users of your platform, a lot of value. But in the last several months, and I think uniformly pretty much across of Australia, many organizations have gone back to the office. I mean, we have for most parts. I mean, not 100% nonetheless. For most parts, we've gone back to the office. What are you finding at the moment with other organizations that are starting to come back into the office, and what does it mean to the solution?
So that's a great question, right? So 8 months ago, when we created this made to us as well. This was the new normal. Last few months, we see that changing now. We got workforces partially coming back, but the way we look at it is that the remote workforce is not going away, right? So when COVID hit, people had no choice but to make the entire workforce remote. But what they realized in that more than a year period was that they don't physically need people sitting in their desks. And what we feel like coming out of post COVID and all of that, HR policies are going to change, and you're not going to be expected to be sitting at your desk the whole time. So we feel like we're not heading into from completely virtual to completely back to physical. We're going to sit somewhere in between, where it's going to be partially remote, partially physical. And in that kind of environment, the traditional employee wellness programs still don't work. You need something to kind of holistically look at your physical workforce. When they disconnect, they go back home. How do you collect all of that? It's all data at the end of the day. How do you collect all of that physically present data versus virtual data? Bring the insights together, surface the risks. So we feel like OKPulse is well positioned to do that, because we've tested it with a fully remote workforce. Now we're looking at new features that would kind of bring it together with what we consider to be the new normal of partially remote, partially virtual.
In terms of thinking about the market space, and now that that's happening, what do you think about the existing providers of corporate wellness and other types of programs of the past? I mean, you mentioned that a lot of them were very physical based, may not have been AI and analytics based either. But now some of the workforce is moving back. What do you think about your platform? Is it displacing an existing way of doing things, or is it just, is it a replacement? Is it substitution? Or is it something organizations, do you think, are going to be starting to bring other programs back as well?
Sure. So when we first, about 5 months into launching OKPulse, we were pretty much approached by Australia's, I guess, two of the largest corporate wellness platforms. One of them had gone bankrupt because they lost all their contracts. And the other was looking very quickly at ways to move from their physical programs to more virtual programs. One thing OKPulse does is has the ability to white label, because we are not a business to consumer, we are business to business. So we allow an existing corporate wellness platform to use OKPulse as a white label product. Now, going back to your question, where the existing traditional corporate wellness platforms, which have a lot of strong portfolio of strong services, most of them, what they lack is the digital aspect of it. They don't have a way to have an employee portal, for example, or a very usable employee portal. They're not proactively collecting metrics and then looking at the analytics and the insights through it. So if we were to look at how OKPulse fits in that spectrum, we allow them to very quickly scale up their digital abilities of employee wellness. So if you've used a corporate wellness platform, they have a lot of physical activities like wellness seminars. They conduct in-organization health checks and all of these things. But what they're really missing is that the employee part of it, right? Is the employee seeing this data? Probably not. It's the employer who's getting most of the value. So OKPulse provides that. So OKPulse by default has employee portals. You can see your own data. You can see how you're tracking. So we kind of augment their services, if that makes sense.
How did you stumble into formulating OKPulse? What was the inspiration behind this?
Yeah, so let's go back about maybe 10 months. So when COVID hit, like I mentioned, Well, let's actually go back longer. Okay, so let's go back about 5 years. So the platform that I initially built to be open source was a data analytics and ML platform, and uh, it was quite robust. It was being built, but it didn't really have that edge use case to it, right? So which we always struggle with. So we had this platform, but we couldn't demonstrate the consumer benefit of it, right? Or we couldn't demonstrate the business value for it. It was just a platform. It's like a cloud platform without a specific app built on it. You know, the key app that people would recognize. So COVID hit. One of my close friends who had a friend who was a psychiatrist. They wanted to play around with this platform, so they kind of spun up an app within it. They built the first version of OKPulse. They collect the first version of OKPulse was just a mood check. It was a scheduled mood check for employees to conduct every week. So it was very simple to build. They spun it up. They looked at the analytics and said, you know what, let's grow this. So they reached out to me again. I created the original platform, so I kind of helped them build the new insights. And then they kept adding new analytics and new sort of metrics, and they were quite fascinated at the end result because it started to surface really valuable, actionable data. So then they knew they were onto something. So they cleaned it up. They pulled it out as a product. One good thing about them and me at that point, as I was doing most of the tech stuff, was we didn't wait to a point where we felt, you know, we should build all this out and then take it to market. What we did was, okay, what could we do in a month? Does it bring value? And yes, okay, so let's just take that to market. Let's take it to the first customer, get them to use it, and then we iterate. So what begun as just a sort of a hobby project to kind of see if we could change corporate wellness and employee wellness during COVID, very quickly grew into quite a large standalone platform. So, for example, the first data type we collected was just a mood check. I think, Callum, when you came on board, we were collecting like 3 different data types, like a weekly check-in. We got like 11 data types now and more than 20 metrics that we pull out. And that's just growing almost every single month.
What's the you mentioned you've also changed the business model quite a lot as well. I remember there was a point where when we signed on, we had quite a lot of conversation around that. What's been the journey like in terms of the evolution of the business model, and you know, where do you see this going?
Yes. So the business model is still business to consumer, so B2C. Sorry, I should B2B, business to business, and the elements we always focused on was frictionless. It was always frictionless for an organization to take this on board as another software that they use. It has to be frictionless, self-serve, and I don't think we've drifted from that specific part. We still believe that that's the quickest way to market. One thing we did change is the pricing model. So, like I said, it's completely free now. But when we started it off, we actually had a tiered approach. So we said, you know, you can try it on if you got 20 employees. But if you want, you know, anything more than that, it's a per employee fee. That's the biggest shift we did, because what we did was said, you know what, we want to go for the growth rather than the actual early sort of fee-based model. So our target now is 1,000 active users through the free tier. And when we hit that, we'll reevaluate and say, you know what, do we need a paid tier? But very unlikely. We prefer to grow as fast as possible through active users.
What are some? I mean, you mentioned friction-free, and you wanted to make it as friction-free as possible. What are some of the barriers that organizations are currently facing before they want to sign up to this?
Mm-hmm. The single sign-on is a huge thing. Like that's a big selling point now. So I mean, regardless of what platform you're building or what startup you're in, if you are servicing the B2B market, especially if that organization has its own identity platform, which if you look at OKPulse, our target market is organizations and employers. They already have Active Directories and they got all of that. So the last thing they want is an employee to go and sign up another username and password, because not only is it quite annoying for the employees, it's also a security risk in doing that. So that was one which we solved. And just recently, like I said, we released Google as well. So we're supporting both the largest Active Directories or employee directories at the moment. The second is something we're working on, is we now have made it frictionless to join, for an employee to join and collect this information and surface this risks to the employee, risks to their employer. But the surfacing part we still feel is a bit manual, because you still need to go into the OKPulse portal, look at the reports. What we're working on now is how do we feed that, get those insights back into the HR systems, the corporate system. So we have HR teams literally just looking at one file of their employees using the existing HR systems. And there's just a section down there that shows the wellness as well, which is collected through OKPulse. So we feel like if we can make this, think of it as tightly coupled into all of these existing workflows that they have, it's going to be pretty hard for them to ignore it.
What's preventing you from getting to the 1,000 active users like in the next month?
Great question. So for us, it's the marketing side. That's our tech is very strong, and we're just kind of working out new market. That's probably our weakness. Like I'll admit it. The marketing and the commercial side is definitely our weakness, but we're really working on that. So I think the only thing stopping us is that. Right, like how do we build that? You and I were having a chat about this. How do you build that marketing funnel? How do you convert those leads? This is really not our subject matter expertise, so we're kind of looking at people who could help us do that, and that's the only thing stopping us, to be honest. And the other thing we're doing is we're not just looking at the Australian market now. We started looking at the wider Asian market. We've just started talking to people in like India and that region who kind of represent that market there. We are not looking at US and all of that at the moment because of certain things we need to tighten up in terms of data sovereignty and all of that. But we're on top of that. So if we really had to go to those markets, we know how to do it. But going back to your question, what's stopping us is what we flag as our weakness is our marketing funnel is not really established right now.
In terms of development and getting the product out, 5 years is a very long journey. Tell us more about your experiences in building the platforms. Has it just been you largely burning the midnight oil in the weekends? What's been your journey in getting the product out?
Yeah, sure. So let's go back to that. So that's a interesting story, and it might have some interesting takeaways from it. So let's go back 5 years. So 5 years ago, I had this idea, and I was full-time employed at that point in time. So I had this idea about how I felt like data analytics and ML is not an app-specific thing; it's a platform-specific thing. And I felt like the thing that was missing was the ability to seamlessly collect data. So I very quickly put together this prototype. I very naively believed that I had solved some big problem. So I quit my job, went out there, started to do this. So I actually started a company. This is 5 years ago, and I started actually meeting investors, pitching at accelerators, doing all of that. And I had about 6-month runway, which I self-funded myself for 6 months, so I didn't raise any money. Again, I didn't have any advisors. I was very naive at that point, right? I was not really a highly experienced entrepreneur or anything like that. But I was super keen in it, and I wanted to give it a go, and I didn't want that opportunity to slip away. So 6 months in, unfortunately, the reality hit me that there's a lot of things here that I don't understand in terms of fundraising, burned through my own sort of runway. But I then unfortunately ran out of money, but one thing I didn't want to do was just give up, right? So it would have been great if I was just single, but I was married, I had kids and all that, so I had my own responsibility. So what I did was I took a full-time job, and instead of just stopping this data platform that I had built, I open sourced it because I felt like it had value. It was completely free, And that turned out to be a great decision because there was a community of people maintaining it, and it also continued to get used. So it never really died. So here I was doing my full-time job. Weekends at night up to 12 or whatever. I'm coding away, and I built the first platform, and I continue to maintain it. And yeah, so that was a good decision. When I think about it now, I didn't give up, even though I couldn't raise the money. I kept it going. So 5 years is a long journey. Potentially could have been compressed a lot quicker if maybe I had made a few different moves. I was a bit more successful in the fundraising, and I had a whole team behind me. But the reality of the situation is it didn't happen. But at least I didn't stop it. So I still keep it going, and that was great because it was as evident by the fact that we spun OKPulse up on this native platform in 3 weeks. It was pretty good. So yeah.
What's it like being on a shoestring budget, essentially self-funding, bootstrapped, and also having a full-time job, and trying to, balance between the two of the things that you're doing? I mean, how do you manage yourself?
I think it's not as bad as what people think it is, right? It really comes down to your personal capacity. So in those 6 months where I was self-funding and I was doing this full-time, that was a lot more stressful because, every month passed, I knew I had 1 month less runway. And I was starting to make bad decisions because my decisions were mainly around what investors wanted rather than what the product really was. So it was quite freeing to me when I actually decided, I didn't really subscribe to the idea that you need to quit your job to make your startup successful. I know that might sound a bit controversial. That seems to go against a lot of the startup advice people usually give. But I felt like if you quit your job and you had other responsibilities in your life and you're pressurized to make decisions, your core product is impacted. So when I started my full-time job again, I felt like this relief just go from me because after that, I didn't have that stress anymore. I didn't think about keeping an investor happy or trying to build up this document pack, etc. So after that, it just became about pure product. And then it was a question of capacity. Do I have the capacity to do a 9 to 5 job, come back home, spend some time with family, and then code up to 1 o'clock? And I had that capacity. So I feel like it comes down to that. Like, can you actually handle that workload? And if you can, then that works great.
So in terms of bad decisions and influencer advice, what would be some examples of what you'd consider as a bad advice?
So bad advice
Like
that
you
I
mentioned,
received.
yeah, I mean, you mentioned that, some of the investors that you spoke to at that point of time that might have, taken you in a very different direction to your product. What would be some examples of that?
I wouldn't say it's bad advice. I would say it's probably subjective advice. So it might suit few individuals, but it didn't suit me. And I gave it a shot, right? So when I very naively quit my job because I had an MVP, thinking that I could very easily raise money, I would and I would cold call. I did the whole lot, right? So I cold call people, go and meet them, show up at an investor's office because he asked me to come down, and then I'm talking to his intern or something. So I've been through all of that. So I think the bad, not the bad advice, but the advice I got from most of them were two things. First thing was, good that you quit your job because that's important. You need to focus on what you're doing, which when I think about now, I don't agree with at all. The second bit of advice I got was, at that point, a single founder, so I didn't have a co-founder, and for some reason they kept calling that out. So they kept calling that out, saying, "Listen, you're a single founder. Great idea. Just get a couple of co-founders together and come and talk to us." Now I do understand why they said that, right? Because when you think about it, I'm sure if you look at the numbers, I'm guessing single founder teams probably have a lower success rate. I'm sure there is reasons for that. But again, I felt subjective. They didn't really know my background. This wasn't the first time I was kind of getting into tech. I've got like 20 years experience in tech, so I came with a bunch of commercial experience, which I think accounts for a lot of things. So I think it's interesting because, and I never, when they give me this kind of advice, I never take offense or anything like that. I just look at it as, I've tried to understand their perspective of it. But I certainly don't take it to heart that, this is their classification of an entrepreneur is, based on I'm sure some formula that they have. But I don't feel like that an actual entrepreneur should be limited by that, if that makes sense.
So in terms of, you've been very successful being able to, get it up to this phase yourself, together with the other co-founder as well now, looking at various aspects of the business. You've been very self-sufficient. I think that's probably one of the biggest advantages I see in your startup compared to, most of the startups that I talk to, the self-sufficiency part of it. And you've been able to yourself personally build a lot of the stuff with your own capacity and capabilities. How does that how does that make you feel? And would you have had preferred to have a team instead of you doing it? Or, on hindsight, how do you feel about that?
Yes, of course. So, of course, I would prefer to have a team. The 5-year journey would have been about a 2-year journey if I did have a team, but I couldn't recruit a team, I guess, with limited funding. I did self-fund myself, so I couldn't get another person on because I would lose runway. So yes, the benefit I had was what I was building was very tech heavy, and I could do that myself. But that's not the same story for many startup founders. One of the other problems I had was I had a really strong network of tech people. So I was trying to influence them to kind of join the journey with me on a side hustle basis. So that was surprisingly hard. I think that was something I thought I could, because these were like my close friends. And I would get them together, show them, get them excited about it, and then I would notice that they would contribute a bit, and then kind of feel the contribution drops off, because it's not the same for everybody, right? Like the motivation levels to work overtime is not the same for everybody. So yes, if I could do anything different, I think, working. I still try to do that, working on my influencing skills to get people to join this journey when I have, we don't have funding. But like I said, there is some joy in bootstrapping as well. You don't have the pressures, and you dictate the product, and you can actually sit with a customer, and I can iterate. I don't have to run that by an investor, for example. So the joys of bootstrapping is quite nice, but the cons of it is, of course, you are slower to do things, right? And if speed is everything, then of course that's an issue.
You mentioned you had 20 years of background before getting into this startup yourself. Tell us about your background, and not only you had 20 years background, you also had an exposure to startups even prior to that.
Yeah. So 20 years. So I came out of uni there, and I think I probably faced the issue most people do. I couldn't get a job. So what did I do? I started my first startup 20 years ago. So the first job I had was my own company, which was a digital agency, and again, I just played to my strengths. I was a really good programmer, so I built e-commerce sites and all of that. This is 20 years ago when none of these things didn't exist. And then, of course, I did that for a couple of years. Reasonably successful when I think back, and I wish I didn't stop doing that, but again, pretty naive, thinking that I was actually not doing too well. So then I got into the full-time workforce. I started my first full-time job was with a startup. So I learned a lot about small teams, high pressure, all of those kind of things. So that was great. But I think for about 15 years after that, I was in the large commercials, so really huge media companies, video companies, finance, all the way up to government and health. So that was brilliant. Then I quit the large commercial sort of environment, and I went back to the startup environment. And again, I love that, because when I went back, it was into the healthcare startup space. And that was super interesting because nowhere in a startup you are involved from top to bottom, and that's so brilliant, right? So I'm writing code, and then I'm talking to a vendor, and then I'm talking to an investor, and then I'm talking to it's so brilliant. And but then again, I kind of dropped that, and I do some work with the government as a full-time capacity. So I think it's a good, like, you need to have that mix. Like, I think going back to what I was saying before, sure, it's great that you do a startup full time, but working in a commercial sort of environment gives you a lot of skills that you can use in your startup space.
8 months, great product. We love it as a user, and we've got a lot of scope for expanding that as we hope to expand as well as an organization.
Mm-hmm.
How do you see this company going in the future? What does the next 12 months and 3 years look like for you?
So the next 12 months, hit our next immediate goal, 1,000 active users. When we hit that, our goal after that is 5,000 active users. I would see that in the next 12 months, very easy. And next 3 years, we feel like this space is quite an interesting space, like the corporate wellness and employee wellness space. And you can see that now as well. So we look at the market now, and we can see all these new sort of ideas and startups popping up in this space. We feel like we have slight edge here, and all we want to do is just get to that 5,000 active user mark. So the commercial co-founder, he started now just looking at options for funding. We feel like maybe bootstrapping might slow us down, so we're kind of looking at that option now. So next 3 years, I know this is might sound a bit too ambitious, but we would say if we have the market share based on our business model of keeping it free and then just getting in everywhere, we feel like some very strong strategic partnership or an acquisition in a space of somebody else trying to get into the corporate wellness space, because we have a very mature analytics engine, and in the next 3 years it's going to be quite strong. As you might know, we got our own ML model as well, so you can imagine that growing over 3 years.
Awesome. I'm going to switch over to our audiences now, and I'll have our executive producer Ashwin. Let's see what's coming out through our live streams.
Yeah, we have our viewers actually commenting on Facebook, and they're trying to connect as well today, and they are requested to connect. At the same time, the question today is, what should the founding team do to make sure that the startup has a great culture?
So what does a founding team do? Very interesting question.
Yeah, I mean, we spend a lot of time on our talk show on the culture of startups in particular. In the past, we've talked a lot about different leadership styles.
Mm-hmm.
We've talked about the importance of things like the growth mindset.
Mm-hmm.
We've talked about servant leadership styles, certain types of leadership styles that bring the best out of the people and create a certain culture at an early stage, which can then grow into an organization down the road. So it doesn't behave like an organization you'd never want to work for anyway.
Mm-hmm.
How are you thinking about some of these things?
Okay, that's a really fascinating question. So let me think back on the 20 years and the startups I've been in, and the startups that I liked and the startups maybe I didn't quite like. The ones that I liked, I think the leadership style that was good was not overly hands-on, but it was to a point where they were part of the engineers. If you look at it, almost all startups now, I would say 100%, 99% are tech startups, right? No matter what you do, you're going to be touching tech. If you're touching tech, your most valuable asset is your engineering base, trying to retain the talent. So I think the startups that I was good at, like we had the founders who had the idea, they didn't disconnect from tech. They somehow would sit in the meetings with us. We felt like, we're quite valued because we are building this thing for, this guy or this girl who's the founder, but he's with us in this. He's almost leading by example. I think that was really good. I'm not saying that the founder has to cut code or anything like that. I'm just saying that being part of your team's brainstorming activities, collaborative activities, but still giving them room to kind of self-run and self-manage. That environment was quite nice, because when you're in that environment, you kind of feel valued. You don't. And now, like, going back to an environment which is not specifically nice, is I've been in one environment where the startup founder would pop in to a meeting and talk about how he's running out of runway. Now, that means nothing to an engineer. So he doesn't really care about that, right, unfortunately, because he doesn't have shares in that startup. So I think that put in negative energy. And I remember even in that startup, the engineers started attrition really quick. So, yeah.
Awesome. Any other questions that are coming through our live live channels?
We have one more, and this is from the opportunity where he wants to work for a startup, and he feels that should he really consider culture as his priority while looking for a job at startup? So what are your opinions about it?
Sure. Okay, great question. I think, I mean, if you're looking for a job, you got to consider culture, full stop, startup, or just even your regular sort of 9 to 5 sort of job with an enterprise. The difficult part there is, how are you going to assess culture? You can't, in your interview, you cannot specifically, you could ask your interviewer, what's your culture like? But chances are they're not going to tell you the truth, right? So it's going to be difficult to assess it unless you actually join the company. So that shouldn't be a stopper for you to go and try it out. But that being said, try to do your due diligence during the interview. Obviously, try to ask the questions. One good question is, ask your interviewer, what's my 9 to 5 look like? What's my regular day look like? What's my week look like? What do you guys do for social activities? What are your sort of team meetings like? So try to get an idea of it before you go into the interview or into the company.
Over to you, Callum.
Awesome. Well, that's all the time we have. We've just crossed the hour. Thank you so much, Mark, for being with us and being part of our show. Signing off, Callum Bir from AI Ventures.